Good morning. This is Andy Nilsson with the State Auditor's Office. I'm not sure we're going to teach you everything there is to know about GASB 77, but we're going to try to teach you what you need to know. With me this morning is Marlis Gaston, who's a director in our Financial Audit Division of the Auditor's Office. Marlis is going to go through a PowerPoint presentation on GASB 77 with you, and to give you a little bit of background that will be good for you to know a little bit about what's going on with this disclosure. And then I'll take you through some footnote disclosures that will be included in the sample reports actually the sample report is out on the web for you already for schools. And then we have a spreadsheet that Ted Nelson from the Department of Management has put together so you can kind of see how that works a little bit. So without further ado, I want to turn you over to Marlis.
Good morning. It's nice to be here with you. I see we have quite a few on, about 89, so you're all, I'm sure, ready to learn about 77. As Andy said, I'm going to go through our PowerPoint presentation. Just want to give you a little bit, let's go down to, of background information on what GASB 77 is. It is a disclosure requirement, so we won't be in the financial statements making any adjustments there, but it's simply footnote disclosure, but it does impact school districts. So we're going to cover that, and then as Andy said, he'll cover some samples with you and go through a spreadsheet that Ted Nelson developed that you'll understand pretty soon why that spreadsheet's important. So first of all, just a little bit of background. This GASB statement is all about foregone tax revenues. There's billions of tax revenues out there that governments forego every year, and that information, and for economic development purposes primarily, and that information is not currently reflected in a government's financial statements. And you're probably thinking, well, we're school districts and we don't forego revenue, and that is true, you don't. But you are impacted when a county or a city that you reside in forgoes certain tax revenues for economic development purposes. That actually impacts your school district's general fund. And so this GASB statement does affect you in that there are some disclosure requirements for that information. So we'll kind of talk about that. This next slide is just some further background. GASB, whenever they issue a new statement, they evaluate what the issue is and how it impacts the financial statement user and the information that the user needs. And in this situation, GASB feels that this information of foregone revenues is important to users of financials to help them determine whether current year expenditures are covered by current year revenues, where financial resources come from and how a government uses them. And also it helps determine a government's financial position and how that changes over time. The statement requires, like I said, note disclosure. Disclosures are required by both the government that has the tax abatement as well as governments that are impacted by another government's tax abatement. So that's where you as school districts play into this statement. The statement is effective for fiscal year 2017. So this next reporting fiscal year, you will be required to implement this and have note disclosure. A little bit about the definition and scope. First of all, it's important to know that this statement does not include all transactions that reduce tax revenues. We really have to emphasize on the definition that GASB provides in the statement, not what it's called or what its form, but on the substance, the details of the arrangement. So next slide. This is the definition out of the GASB statement of a tax abatement. The GASB says it's a reduction in a tax revenue that results from an agreement between one or more governments and an individual or an entity in which the government promises to give up some tax revenues that they would have otherwise been entitled to, and the individual or entity promises to do something specific, take some action that contributes to economic development or otherwise benefits the government. So that's the formal definition in the GASB statement. So to break it down a little bit, there's some distinction between tax abatements and other types of tax expenditures. Other types of tax expenditures are things like tax exemptions, where you might be able to exempt certain income from taxation, like municipal bond interest, how that's excluded from taxation, as well as tax credits or deductions, things like when you deduct charitable giving on your individual tax. This statement doesn't cover those types of tax expenditures. It's keying strictly in on tax abatements, and with a tax abatement, some things have to be in place, and that is the agreement. It can be written or implied, but there has to be a clear, identifiable agreement between a government and an individual or entity, not between two governments, but between a government and, say, a corporation or something that's trying to move into town. The agreement has to happen before that individual or entity takes whatever action they've agreed to do. So if they've agreed to move a fairway into town, the agreement has to happen before that action takes place on the entity's part, on the individual's part. And in accordance with GASB, an application equals agreement. So these are all things important to understanding the definition of a tax abatement. And finally, the purpose of the abatement, the action that's taken has to contribute to economic development or otherwise benefit the government in some way. So you can see where tax credits and exemptions, they're more broad-based and they don't have that specific element where they're contributing to economic development. This last one on sort of the definition is just timing is essential. When the tax reduction happens doesn't matter so much as when the agreement is entered into. So it has to be something that's entered into before the entity takes their action, as I've said. So, so what's in and what's out? Andy Nielsen early on put together a committee, included some individuals from our office as well as from Department of Management. We had a county representative, a city representative, someone from an assessor's office, just all folks, Department of Revenue that might have some perspective that would help us determine all of the different credits and abatements, potential abatements in Iowa and at the local government level. Do those meet the requirements and the definition of GASB Statement 77? Are we going to have to do some specific disclosure with those? And really what we found that with that committee, we evaluated, like I said, all the potential abatements that we could identify in Iowa, and it really comes down to there's really just three. There's a whole list of them that exist, but there's really just three that seem to meet the definition of GASB 77, and that is the high quality jobs program, the new jobs training from community colleges, and then tax increment financing, rebates, development agreements, and grants. And that's the one that's going to impact your school districts primarily. Out is almost everything else. Possibly in, it depends on the city's policy that establishes the Chapter 404 urban revites. If the application in that case precedes the action, then those could potentially be. But the one that you should be concerned with is the tax increment financing arrangement. So general disclosure requirements. As I said, this is a disclosure standard, so so it's the note disclosures that we're concerned with. So I'll go over some general principles and then some specific things that you have to make sure that you're including in your note disclosures. First of all, the standard says that a government has to disclose information separately for both its own tax abatements. So if it's a city or county that had a tax abatement, they have to disclose information for that, plus any tax abatements that are entered into by other governments that reduce the reporting government's taxes. So as a school district, when a city or a county you reside in enters into a tax increment financing rebate agreement or offers an economic development incentive through that program. When they do that and they divide taxes off that base and those incremental taxes go to that particular project, that takes money out of not just their general funds, but the school district as well. So you are impacted by that government's abatement that they entered into. Secondly, disclosure can be for individual agreements or they can be aggregated by type. So if it's a government's own abatement, that's organized by major tax abatement program. For you folks, for you who are impacted by other government abatements, you have to first organize the information by the government that entered into the abatement, so by the city or the county specifically, and you can be impacted by more than one county if you reside in more than one county. And secondly, by the specific tax that's abated. Okay. Also with disclosure, disclosure has to start in the period in which the tax abatement or agreement was entered into, and it has to continue until the abatement agreement expires. So what that means for you is the year that taxes are first abated, there's some information that you're going to have to disclose. And we'll get to how you know what that information is when Andy talks about the spreadsheet that Ted has put together that's going to kind of make everybody's life a little easier. There is an exception if a government makes a commitment other than to reduce taxes as part of the agreement. So for example, if the city agrees to put an access road into that fairway that they're bringing into town, that's a different type of commitment, and that commitment only has to be disclosed as long as that commitment is outstanding. So as soon as the road's in, that disclosure goes away. Okay, specifically required disclosures is these next couple slides, and for you, you're really looking at that second column and other governments abatements, what you are required to disclose when an other government enters into an abatement agreement. So on this first slide, there's just a couple things mentioned. The name of the government, and secondly, the tax that's being abated. Is it a TIF tax? Is it a rebate agreement? Is it what type of tax is being abated? And in this case, it would typically be a tax increment financing. The next slide, there's a little bit more there for again that second column. You have to disclose the dollar amount of tax that was abated. And these disclosures are a fiscal year disclosure, so whatever was abated in the fiscal year that you're reporting on, so July 1 to June 30. And again, that dollar amount of tax abated could be pretty complicated to get that information, but Ted, again, has that spreadsheet that will walk you through. So you'll all be breathing a little bit easier when you see that, I think. The next thing is amounts received or receivable from governments associated with abated taxes. That one affects you as school districts because of the backfill of foundation aid that you get from the state. So if you forego revenues because there's an abatement agreement in your city or your county, you get a portion of that back through the foundation aid backfill. And again, there is a calculation that's done on the spreadsheet that will show you, that will actually give you that information. So as far as coming up with information, the dollars that you need to disclose, that's really going to be a matter of this spreadsheet and getting information that that gets plunked into the spreadsheet, I guess, and it comes up with the dollars that you need. The last two items, the quantitative threshold for individual disclosure. So if your counties or your city enter into several agreements, you can individually disclose those, but you have to decide on threshold. So anything over $100,000 you're going to disclose individually, and everything else you'll aggregate. For the most part, you're probably not going to have, unless you're a larger district, you may not have a lot of individual disclosures. You may be aggregating by type of tax that's abated. And then finally, information that's omitted due to legal prohibitions. And that's, if there's something that you can't disclose, Because a legal issue would not allow you to disclose it, then you have to indicate what disallows you from disclosing it, and whatever information you can disclose should be in your note disclosures. So that's essentially what GASB 77 requires. Again, it's a disclosure, and for you as school districts, you're looking to disclose just those taxes that are foregone because another government has entered into an abatement agreement. The last slide talks about component units, and just to be aware that if there is a component unit that has a tax abatement that reduces revenues, that also will impact or could have some impact on you folks. I think it would probably be rare. So next, I think I'll turn it over to Andy to talk about note disclosure and how we're going to come up with the numbers we need.
Hello again. Let's see. Okay. These are some footnotes that we've put together, that we've drafted to be able to help disclose GASB 77. As Marlis mentioned, excuse me, GASB 77 is merely a disclosure standard. It does not impact your numbers on your statement of net position or any other of your financial statements in any way, shape, or form. It's just a disclosure. And part of the reason why GASB felt this was necessary is, and looking at GASB concept statement number 1, they realized that there was a little bit of a hole in governments relating to the taxes abated piece. And the reason why there's a hole and why it impacts this is because one of the concepts in GASB concept statement number 1 that is talked about a lot, and GASB uses a lot to try to design its principles, is the principle of inter-period equity, which means, are the revenues of the current period adequate to support the expenses of the current period? And obviously, if a piece is being left out of the pie, that is a potential item, and that's why they've gone after this. The first note that we're going to look at it happens to be a city note, and I'm doing this on purpose, or actually it's a city note, and I'm doing it on purpose because I want to show you some of the pieces that Marlis just got through talking about. The first paragraph of this note goes through and shows you the definition of what the tax abatement is. It's a reduction in tax revenues that results from an agreement between one or more governments and an individual or entity in which the one or more governments promise to forego taxes which they're otherwise entitled, and the individual or entity promises to take a specific action, and we should bold this item right here, after the agreement has been entered into that contributes to the economic development or otherwise benefits the governments or citizens of those governments. After is a big deal. We spent a lot of time deliberating and looking at various programs to see whether or not there was anything required afterwards. Let me give you an example. Homestead credit. All of us that live in homes, own homes, get a homestead credit. And what you do is, after you buy a house, you go in and you register for homestead credit, and you get a certain amount of credit off of your property taxes. Now, that could have been a tax abatement, except for the fact that there's nothing required of you after you move in. You move in, you go apply for it. You don't have to do anything except live in the house. And GASB said that that's not something that's going to trigger that you're not doing something afterwards. You're just negative actions don't count in that way. So that's kind of the answer to that one. The next paragraph goes through and talks about several things. Number one, it gives a brief description of what the abatement is. That's what this first part is. It talks about The code sections that allow this abatement, and in this case, economic development is 15A, and excuse me, tax increment financing is 403, chapter 403 of the Code of Iowa, and then it basically goes through and gives a mechanism, how the mechanics of how the rebate is going to happen. And for TIF, there's really 3 different ways that can happen. After the developers meet the terms of the agreements, the city can rebate a portion of the property taxes paid by the developers. They can pay the developers an economic development grant, or they can pay the developers a predetermined dollar amount. It doesn't matter which of those 3 they do. Any one of those 3 results in an abatement. I know we had some fairly spirited debates as we walked through this, and said, well, we're not rebating anything. We're not abating any taxes. We're collecting all the taxes that we're going to. We're not giving them their own. Doesn't matter. At the end of the day, the city in this particular case is foregoing some revenue, and that's the only thing that really matters. We were fairly early in the implementation stage of this nationwide, and GASB was kind of wondering why, we called them, I think, 5 or 6 different times with questions, and they helped us, walk through this and get to the point where we're at right now. So, as Marlos mentioned also, if there's any other agreements that the city made, if they have to put a road in or anything else that and connected with this, that'll be included here. In this particular case, we put no other commitments in there. I'm not sure that we'd have to have a negative disclosure here, but we put one in just to indicate that we did consider it and there weren't any in this case. The next paragraph is the meat of the issue here. For the year ended June 30, 2017, the city abated so much of property taxes, and the dollar amount that the city is going to put in here is going to be the gross amount of tax that they abated during this year. So this is actually the city's own impact. So if, let's say the city, for example, rebated $100,000, and their portion of the tax is $25,000. The $25,000 would go in this particular blank here. And then the city also has to be concerned about the other type of abatements, those abatements that impact other entities, or the abatements of other entities that impact the city. So that's what this section does. It goes through and says, okay, the county of ABC also has some urban renewal projects, etc., and they amounted to abating taxes of this much. Now, in this particular case, that's the only abatements that this city had. So it's fairly simple. For those abatements of other entities, you need to indicate the entity, the tax that's being abated, and also the amount of taxes abated. So now we're going to switch over and we're going to do a school. The school note looks a little bit different, and the reason why it looks a little bit different is because schools don't have any abatements of their own. You basically have revenues that are passed through by in the property tax realm by the county. You also have some taxes that may be impacted by some of the things that the state does. Again, this note has, the first part of this note deals with the definition, just to let the reader of the financial statements know what the statement is, what the GASB statement 77 is about. As I mentioned before, it is available in the sample school report, which is out on our website at the present time. The next paragraph is the meat of the issue for schools, though. For the tax abatements for other entities, this paragraph goes through and it says, okay, in this particular case, their school has a couple cities within it, ABC and DEF, that have tax increment financing in their particular cities, and you'll get the amounts to put in these blanks from the spreadsheet that we're going to talk about in a few minutes. Now, I did throw another tax abatement program in here. I didn't identify what it was because I'm not sure what it might be. Marlos did mention the Chapter 404 Urban Revitalization. It is possible that your city could have some of those under certain circumstances. I think most of them in the state are not going to be impacted by that. The city of Johnston, I understand, has a required application process before you do the work. Most cities, though, according to Chapter 404 of the Code of Iowa, here's kind of how it works. Let's say I wanted to do an improvement on my house. I could go ahead and add a room to my house. If I spent more than 25% of the value of the house as an improvement, I could do that. I could add a wing onto my house, and then I'd go into the assessor and say, hey, I've improved my property. And the assessor would go out and look at it and say, yeah, yes, you did improve your property, and we're going to abate your taxes over the next however many years the city's program runs. And if you look at that, after I entered into the agreement with the assessor, I didn't do anything. I already had it done beforehand, so that wouldn't show up here. But there are a couple cities, as I mentioned, Johnston's one, where you might have something in this other tax abatement program area. Okay. Same thing with the county. There are school districts where you're located in more than one county. If you have more than one county, you could have more than one county listed here. And we'll talk about that in a couple minutes as we go through the spreadsheet and how to determine whether or not you have more than one county, or if you've got all of the items listed here that you need to have listed. This last paragraph is unique to school districts. The law is set up so that if you do have a TIF increment that's pulled off and used for TIF programs, the school district does get reimbursed at this time $5.40 per thousand evaluation in that increment. So, and this is something that will also be computed on the spreadsheet, and you'll drop the number in that's I've got a double triple X here. I don't know if that means it's really bad or just, you know, that's the number I chose apparently. So that's one thing there. There is one other item that we're still working on. 2 weeks ago, a couple of people from the Auditor's Office met with Department of Administrative Services and Department of Revenue, and we're still working on some non-refundable tax credits. There are a number of school districts that have income tax surcharge or surtax, and if the state has some non-refundable state credits, this could potentially impact those of you that have income tax surtax. Why do I keep saying surcharge? I know it's surtax, it's written here. Apparently I can't control my tongue that well. So we're still working with the Department of Revenue. We're trying to determine if it's material. We're not sure how material it's going to be, but the Department of Revenue assures me that they have the numbers that we'll be able to put together, you know, some numbers to get on our website for you to say, you know, how many of those tax credits might be impacting your particular district. So that really goes through and shows you the footnote disclosure. Again, I'm going to tell you that it is the sample footnotes are available on the sample or in the sample reports that are on our website. But just want to make you aware of those so that you know that you'll get those put in your reports for the year. We have also discussed this with the CPA firms, both at the local government update and at the governmental roundtable. If your firms that do your audits have attended those, they should be familiar with this. We did involve the Iowa Society of CPAs as well on the committee that we put together to try to work on this, so they should be fully aware of it too. So the next thing I want to do is pull up the spreadsheet that's been put together. Ted's put a tremendous amount of work into this. It's a fantastic tool to help get the numbers together, at least for the TIF part. After we find out how material the income tax surtax piece is, we'll try to help put something together for those districts that have that. I know there are a lot of you that do have that. The way this spreadsheet works is, first of all, this spreadsheet will be available sometime after July 1st. Ted's still fine-tuning a little bit, I believe. It'll be available on the Department of Management's website and the Auditor of State website. And basically, this is a tool that's going to help cities and counties calculate the impact to other governments for the TIF rebates, grants, or predetermined amounts that they've entered into. So theoretically, you do not have to know how this spreadsheet works. Theoretically, you don't even have to do anything with this, but it's going to be a good tool for you to be able to help you determine which entities you should receive letters from. Speaking of letters, this tool, and I'll show you in just a few minutes, this tool actually puts together, it formats letters that the city or county that has TIF can print out and send to you and any other affected entity. As I said, it'll help you know which entities you should receive a letter. So the way this works is it's set up so that you just go through and you find the city that you're in. And I live in Ankeny, so I'm just going to pick on Ankeny. And three urban renewal areas pop up along the side here. And you'll notice that 2 of them are black and 1 of them's in red. Okay, now the one that's in red means you don't have to worry about that one because there was no tax divided in the current year for that particular district. But what I'm going to do is I'm going to throw some numbers in here. Just for illustrative purposes, I'm going to put $100,000 in each one of these. Maybe. Oh, I guess maybe I slipped a digit here. Let's take one of those out. Okay, there we go. It's reacting a little bit slow, and that's probably good because I'm a little bit slow too this morning. Okay, so you'll see that I've put $300,000 in here, but it only picks up the black ones. So it only lists 200,000 for these top 2. This one's being disregarded because, as I said before, no revenue was diverted or divided or taken in that particular district. So that one's going to be dropped out. Okay, so what this tool does is it goes through and calculates, spreads that $200,000 over the various entities, levy authorities that get that tax. Okay, for example, Broadlawns had $17,000 that it would have otherwise got that was diverted to TIF for that year. The city of Ankeny, and that's the one we did. The $200,000 that they entered into cost them $46,000 of taxes. Des Moines DMAC, $5,400. Ankeny School, it costs them $83,720. Okay, and the state foundation aid backfilled that to the tune of $32,000. So those are the 2 numbers that are going to go into the Ankeny School's footnote for the city of Ankeny. Okay, Sadell School District had one little piece also, so they got $1,262 that were diverted, but they received $742 back. Now you might say, okay, how come this one is a much larger portion? Well, it was basically the levy was a lot less, and also the levy, the 540 levy was a little bit more than half of Sadell's total levy. So that's why they got a greater portion. This is a little bit less than half. This is a little bit more than half. That makes sense. Again, the rest of the entities here, Polk County got 40,000, assessor, ag extension, yada yada. Now, for those of you that have inquiring minds, and for your auditors, well, actually, let's go to the second piece. This second piece basically shows you by district, and you can see that Sadell had a little piece in this particular urban renewal area in 77-018, but didn't have any in 77-019. And 77-080, as I said, didn't divide any revenue, so they didn't get any. So this will show you the details of how that worked. And then for those of you that have inquiring minds, and particularly for the audit firms, here's the detail backup between this. It goes through, it has all the rates for all the different entities. It goes through and calculates shows you how to calculate the various amounts that are on this page. So it gives you an audit trail. As Ted said, it would have been a lot more fun to do this spreadsheet without this piece, but without this piece, auditors are probably going to be scratching their head and saying, okay, how in the world do I validate that that's the right number? And how do you validate as a school district that that's the right number? So that's the second piece. The third piece, I guess, that's there. The next piece is the interesting piece. This is the letters that I've mentioned a couple times, and basically what this does is it's set up so that whoever's filling out the letters, like I normally can spell my own name. What this does is that it puts together letters for the school districts. Okay, what am I doing here? I was trying to make it bigger. This one. Okay, looks like I'm off to the side here. Oh, I can probably slide it this way though, can I? Okay, there we go. Okay, so what this does, let me get it down. Okay, here's Sadell School District. So this is a letter that the city of Ankeny is going to send to the Sadell School District. And what it says is, during the year ended, June 30, 2017, the city provided some tax abatements that were subject to GASB 77 disclosure. It says Sadell is required to disclose certain tax information in its note. So in this particular case, this is the amount that we can see from the previous detail. $100,000 of this, I guess we wanted to go over to this one. $100,000 of this was in a district that Sadell resided in. So that's the $100,000. And this is the 1262 that was diverted from Sadell. And if you go down the bottom note here, you'll see that it was backfilled $742. So you should receive a letter from each city and each county in which your district is located. So I want to show you. Oh, here we go. I wanted to find the Ankeny School District for you. Here's the letter for Ankeny School District. And the same thing in this particular case, as we see from the detail, both Ankeny School District was included in both of the TIF districts here. You see dollars that were diverted here, in these two areas here. So it adds both of these two numbers together, which is $200,000. And it shows you that here's the tax abatements that have impacted it. And of that $200,000, here's the impact that it had on Ankeny School District, almost $84,000. And down in the next paragraph, the district received $33,000 of that back as a replacement of school foundation aid. So that's how it works in a nutshell. Now, I want to go back to this first sheet. So if I were, let's say that I were Sadell School District, I would want to go through it. I'd want to, well, let's not do that. Let's do, I'm Ankeny School District, okay? So I want to find out how many other entities might have TIF that might impact me. So I'm going to go down and I'm going to find Polk County. And Polk County has 3 TIFs. And again, you'll see that there are 2 that are related to, that had current year division of revenue. And there's 1 that didn't have any. And we can go down below and we can see if any of those impacted the Ankeny School District. None of those impacted the Ankeny School District. So we don't have to worry about that. Let's try Elkhart. Okay, Elkhart has 1 district. If we go down below, you can see that does not impact Ankeny either, but it does impact North Polk. So that's the only one that impacts. So from a school standpoint, this tool is great that you can determine which cities and counties you should receive a letter from. So that basically walks us through the spreadsheet and gives you a little bit of feedback from that. So be thinking of questions that you might have. If you have questions, I understand that you can type them in and you can get those to us, and we'll try to help with those. That's pretty much gets us through our presentation this morning. So if questions that you might have.
There are a couple of questions, so let me just read those. If the city continues the abatement after the first agreement, is this still considered one program? Also, is the amount reported only amount for the current year, even though the tax abatement has been ongoing for several years? So we don't use the accumulated amount abated, as the accumulated amount reduces the valuation each year, not just 1 year.
Right, great questions. And I'll answer the second question first, and you may have to repeat the first one for me. The answer to the second question is that you only report the current year abatement. So you only report and disclose the taxes that were abated in the current year. And prior year and subsequent years are not covered by this. It's just the current year. And then what was the first question again, please?
If the city continues the abatement after the first agreement, is this still considered one program?
Yes. If each year you take a look at the definition, and if it still meets the definition, then it would still be considered an abatement. So I'm thinking what you're saying is that you have you could have an urban renewal area that's been entered into, and you may add a little bit of area to it through an amendment. Yes, you would. Everything that's being abated in the current year would be covered by this disclosure.
Okay, so I'm getting a number of questions about the Excel spreadsheet that you demonstrated, and they want to know when that will be available and where will that be on your website?
It will be shown in a prominent place on our website. It also will be on the Department of Management's website. I'm not exactly sure where at this point, but there'll be a link there that you'll be able to find easily. It'll be on the main page of the, probably both Department of Management's website and Auditor of State's website.
Okay, next question.
And the second part of that is I was just informed that it should be available toward the end of this week.
Thank you. So next question, when should we expect the letters from the city?
That's going to be an interesting question. We are presenting to the cities toward the end of July, so that they will know about, I think it's on July 25th or 26th when we present for the cities. We've already talked to them about this a little bit over the last year or so. But you know, they may want to contact their city if they, you know, if they go through what I just showed them and said, you have Sadell knows it has a letter coming from Elkhart, or excuse me, it does not. North Polk knows it has a letter coming from Elkhart. They could give them a quick, friendly phone call and say, hey, we know that you've, potentially have some information for us. What's the timeline on this? We really don't have any, neither the Department of Management or the Auditor's office have any control over when they send those letters out, but hopefully we're gonna tell them to get them out as soon as they can.
Okay. Let me see. We're getting a lot of the same questions, so I'm trying to consolidate that. Here's one. What line of the aid and levy worksheet shows the amount of the state foundation aid backfill?
I don't believe there is any line that shows that. That information will be provided to you in the letter that comes from the entity, so you really will not have to have that from an independent source.
Thank you. Next question. What is the amount based on your Ankeny example that goes in the disclosure? Is it the net of the amount of the abatement amount minus the backfill, or the full abatement amount?
It's a full abatement amount. So in that example, what was it, $82,000, as I recall? We'll go back and look at it. I've got a really good memory. It's just real short. Okay, I did it again. Apparently that district has $1 million instead of 100,000. There we go. I'm not going to put the red one in because, as you remember, if it's in red, it doesn't matter. So if you go down here, the amount that's going to be in the letter for Ankeny School District. Okay, that didn't update for some reason. Okay, we're computing 72, 92%. Okay, there we go. The $83,720 is going to be included in the second paragraph of your letter in the table, and then the $32,900 is going to be included in the last paragraph of the note itself. Okay, other questions?
How did you know the amount of qualifying amounts to enter on the spreadsheet, or do you just start with $100,000?
No, that's a great question. That's something that each entity, each county, or each city is going to have to figure that out. I'm just using these numbers to illustrate how it works. And that's why you have to wait for the particular city or county to give you the letter, because no one else other than that county or city is going to really know what that number is.
Thank you. Next question. If the city has no TIF, will we still get a letter stating there was none, so we know there's nothing to report, or will we only get a letter if we have to report?
You only get a letter if you have to report. If the city doesn't have any TIF, then you won't. Yeah, you only get a letter if you do have a TIF. Now, the other thing that the other tool that Ted Nelson is putting together for cities and counties as well as school districts, community colleges, and anybody else is he's going to put together a listing of the cities and counties that have current year TIF divided. So if you go out and look and you figure out that you're in these, you have a potential of these two small cities and this county, and they're not on the list that's going to be put on the Department of Management website, you won't have any. But I'm guessing there's like 400 and some cities that have TIF, and there's like 40 some counties that have TIF. I guess 50 cities that have TIF, 50 counties. So 50 counties and 400 and some cities. So there's a good chance that your district is going to have some disclosure to be made under GASB 77.
Would the letters only be from the city or from both city and county?
Yes, great question. The letter is going to come from the entity that has the TIF. So you could have, you will have a letter from the county if the county has TIF. You'll have a letter from the city if the city has TIF. They will not come on the same letter.
Where can the school district find out all the TIFs and abatement agreements that are current? From the county auditor, from the Department of Management website?
The Department of Management website has a TIF reporting tool that they can go out and look at, but that's really it won't be updated. It's a year behind, so that it's not going to do them a lot of good. It's not updated. It's not required to be updated by code until December 1st. So you could go back out and look at that to see what they've had in the past, but you'll have to wait for the city or county to let you know what abatements they had during the current year.
Do these amounts have to go on our CAR anywhere?
I do not believe that they go on your CAR. There's, this is a note disclosure. It does not impact financial statement amounts in the statement of net position or operating statement. So I do not believe that it's on I don't know where it would be put on the CAR. If I find out that's different than that, the answer is different than that, I will get back to Nancy and she can broadcast something for you. But I'm 99% sure that there's nothing on the CAR that's going to deal with this.
Is there any penalty if the city doesn't get information to us in a timely manner?
No.
By what date should we receive the letter regarding TIF?
That's something that the entities are going to have to work with the cities and counties and that impact you. We have no control over that. It probably wouldn't hurt to give them a call up front and say, hey, do you have any? If so, when can we expect it?
I believe this is a disclosure in our audit report. If our audit report goes in before we receive the information, do we need to amend the audit?
You're going to have to work with your audit firm on that, but I really doubt if the audit firm is going to sign off before you have the information.
August 1st seems like a reasonable date each year for cities and counties to get their letters out. Could a suggestion from the state auditor's office be made along these lines? Thank you.
We could suggest that. I'm not sure how much impact it would have.
Will districts be notified when there are deadlines set for cities and counties to provide information to districts?
There's, okay, the answer to that question is that we have no authority to require cities or counties to provide that information by any certain deadline. We have indicated to them that it would be helpful to get them to the other impacted entities, but there are no requirements, so no, we can't do that.
Okay, here's a long question. This disclosure is only showing the new additional abated property during the year and does not disclose the actual state backfill if there was not an abatement. Is that true?
Read it again, please.
This disclosure is only showing the new additional abated property during the year and does not disclose the actual state backfill if there was not an abatement. Is that true?
Basically, this statement requires disclosure of the amount that was abated during the current year only and the amount of backfill during the current year only.
She then says, when I enter the total abated valuation over a 7-year abatement period, that would be on my aid and levy worksheet. It will show a higher amount of backfill than one current year. I'm just trying to clarify using only new abated property on a 7-year abatement.
Okay, well, there's a couple issues here. Number one, not every TIF dollar is going to be an abatement, and the reason for that is let's say that I'm the city of Ankeny, okay, and I have a city of Ankeny may have abated. Let's say they abated $500,000 this year instead of the 200 that's on the screen. The other 300,000 could be being used to pay its own debt. For example, a city or county has many different choices of how they structure agreements. These rebates, developer agreements, predetermined amounts are just one form of this. The city may have gone out and they may have built a road for something. They may have gone out and bonded for that themselves, and they're paying the principal and interest with TIF. In that particular case, they're paying their own debt. There's no agreement with another entity, so it's not a tax abatement that's subject to disclosure under GASB 77. So you cannot line up the amounts on the aid, the aid worksheet with this. It's not going to work. Basically, because not all TIF dollars are an abatement subject to disclosure under 77. There's only selected items, and that's why we're dependent upon the cities and counties to report that, because they're the only ones that are going to know, whether it's something that they bonded for themselves. Actually, you can go out and look on the website, because if they bonded for it themselves, it'll be on the TIF website and the Department of Management website. So that's one of the reconciling items that's going to be there.
Thank you. So next question, should the value of all the TIFs listed for fiscal year 17 equal the TIF value certified by the county auditor for the fiscal year 17 budget?
Okay, you have to read that again for me, please.
Should the value of all the TIFs listed for fiscal year 17 equal the TIF value certified by the county auditor for the fiscal year 17 budget?
No, for the same reason I just talked about. Some may be subject to tax abatement disclosure, some may not be.
Okay, next question. Who is verifying the amounts being reported to the schools by the cities and counties? What are the likelihood that these figures are accurate?
That's a good question. We do have the calculation details here. I know when we do an audit of a county or city, we're going to be looking at these and auditing them. I'm guessing other CPA firms will. Also, there is an issue, though. There are a number of cities that are not audited every year. I'm guessing that some of those cities that are not subject to an audit each year, I'm guessing some of those do have TIFs. So one of the ways that you can see if it's reasonable or not is by checking the Department of Management website to see what programs they have out there, and is it reasonable that that amount of tax would be what would have been foregone in that particular year. So it's an interesting process, isn't it?
Yes. I don't have any more questions.
Okay, well, thank you so much today. If you do have follow-up questions to this, feel free to email them to me at andy.nielsen@auditor.state.ia.us. I'd be happy to try to help you with that. If you have additional questions on how you're going to verify this, I don't really have good answers for that. I'm not entirely sure that GASB anticipated how hard this standard might be. At first glance, it looked like it was going to be fairly simple. In the long run, it's turned out to be anything but simple. The good news is, though, it doesn't deal with financial statement amounts. It's a disclosure item, but it is an important disclosure. And if you don't make a disclosure, I'm sure your CPA firm is probably going to have to qualify to your audit opinions, and you're not going to want that. With that, I'm going to thank you for your time. Again, any questions, let us know, and have a great day.
Thank you, Andy, and thank you, Marlis.
Yeah, you're very welcome. Are we offline?
Not yet. We are still online. There's still like a number of people. So hang on a few seconds.